Good morning, everybody. Welcome to the Flow Show. Hope you're all doing well this fine Wednesday, CPI day. Morning, Kay. How are you, mate?
Morning. Happy Wednesday to all. I'm good. Waiting for hopefully some volatility.
Yeah, the biggest data point in the world since the last biggest data point in the world.
And before the next biggest one.
Yeah, exactly. We're always waiting for something, aren't we? And then we moan about it afterwards. Such is life of a trader, eh? Right, let's get cracking. There's another region in China, city, whatever you want to call it, who's loosening home purchase restrictions. The Zhengzhou region doing that as well. So it seems to be spreading across China. PBOC keeping their fixes below 720, no real change. 7.1894 the fix yesterday. Dollar China looking a bit softer again this morning, sub 730 now, just nicking below the prior lows, 729s into this traffic zone, which, you know, sort of 727, 28, 29, however you want to look at it. You can never stick one number on this currency. It's always a couple hundred pips here or there, but 727's my next level. If we get under this 728, might get a look down there towards those other lows, but we shall wait and see. Data wise, I haven't even got my calendar ready. Over in Japan, let's see if we've got it here. Yes, we do. PPI came in a tiny bit hotter on the month, and matching expectations for the year on year, which was a bit lower than last month. So still some inflationary stickiness going on in there. Japan's LDP policy head says he wants to see economic measures bear fruit around New Year's. Is this calendar New Year's, Kate, or fiscal New Year's?
Oh, no. Not this time. No, not this time. I mean, let them sort it out, the translators.
Well, one new year. It's they're expecting it to or want to see it bear fruit around a new year. It will leave you guessing which new year that is. Anyway, moving on over to the UK, and some pretty soggy GDP data has got the UK press bemoaning the perils of the UK again. The monthly number coming in 0.5%. What a shocker, you may think. Well, it was a bit of a shocker last month because it went up 0.5%, where it was expected to only be 0.2%. And it's quite funny because reading through the press reports of that prior number, all the headlines were basically, oh, UK GDP beats expectations, blah, 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 blah. This time it's GDP collapses because of 14 straight rate hikes and the worst in 7 months and the worst this, the worst that, the worst the other. It's funny how, as I was saying yesterday, how the press like to spin the UK in a negative light when things are bad, and they don't like to promote things when things are good. So last month was a bonza one. This month is a crap one. JP Morgan cut their 2023 GDP forecast to 0.4% from 0.6%. Ooh, whoopee-doo. Again, shows the folly of bank forecasts. They might as well pretty much have made a minus 0.5 to plus 0.5 range for the whole of the year at the start in January, and left it at that, and they probably would have been more right in those terms. Industrial production, a little bit weaker on the month, down 0.7%. Year on year, a little bit weak also, 0.4%. Pretty much par for the course. Manufacturing, not as bad as expected. The year on year up a bit better. GDP numbers, there's a lot of the weather and strikes being put in for the reason why the data's a bit soft this month. Obviously, tons of strikes ongoing that month. And also the soggy weather, which we saw hit retail sales back then as well. So that's all playing a part of the picture here. The 3-month rolling GDP, 0.2%. So you can use that as a sort of quarterly number. So that's pretty much as expected, and as we've been saying for all this year for the UK, and pretty much a lot of the economies expect them to be bumping along the lower path for growth, tepid growth across the board. So no real difference showing there. There was a bit of an improvement in the trade balance data. As you can see there, trade balance improving to negative 14 billion from negative 16 billion. On the import-export side of things, imports were down 0.4%, but exports were up 0.8%, driven by a rise in exports to Europe, but a fall in non-EU exports. So on the activity front, a little bit mixed between those, one down, one up. The fact that they both weren't down or up puts it middle of the ground between the positive negative scale, as we often talk about with GDP. Germany not looking too good on their construction front. The FT reported that German builders are warning of a crisis because they're scrapping a record number of projects. 20.7% of companies said they've been forced to scrap a project in August. That's up from 18.9% in July. This is a survey of 500 property construction firms. The proportion of those firms reporting a lack of new orders surged to 54.2% in August. Call it a surge, but it's still 56% who are seeing new orders. So there you go, again with the spin on the negative number side of things. ECB's Villeroy says overall inflation is past its peak in France. Doing a little victory lap over there. We'll see if that's the case. ECB will bring inflation towards 2% by 2025. Industrial production in the Eurozone was out this morning as well, and much worse than expected, down 1.1 and 2.2% respectively. Much bigger than the 0 points minuses we were expecting, obviously worse than last month. So that's a reflection. Probably a lot of skew in there from the German side of things, as they've been the worst of the bad bunch, but still it's negative numbers upon negative numbers. Now, what we did get last night, as I'm sure you're all aware, is good old sources piece out on the ECB. This is from Reuters, citing sources that the new inflation projection for 2024 will go above 3%. They will also lower 2023-24 economic growth forecasts, they say, to be broadly in line with market expectations. Now, Kat, I don't know if you remember, and correct me if I'm wrong, the last time we got a sources story like this before an ECB meeting, because usually we get them after, was on forecast as well. I think it was back in 2022 when they jumped. I don't know if it was a 2023 or 2024 inflation forecast above 2%. I don't know if you remember that one back then.
That sources piece.
Yeah.
Yeah, it was.
The last time we got one before the ECB.
Yeah, it was, and I still remember. Oh yeah, I recall well. And we, I think, was it Kazakhs also that came out like right after the ECB meeting or so, you know, and we even said, like, I think we found our source.
Yeah.
It must be Kazakhs or the other one. The other one.
Casimir.
Yeah, something. Yeah, one of those guys. Yeah, I recall that. Yeah, and yeah, they were on the money. But again, I mean, are they going to revise it to 3.5 or to 3.1%? If it's 3.1, then I'm not thinking, okay, sticky, yes, but and the market will likely then go higher for longer. But it all depends on the magnitude that they revise it with, right?
Yeah, there's that, and I think it's also the fact that he's not coming down.
Yeah,
is a factor as well. But yeah, I mean, obviously the market took that as a hawkish slant, and it's been the case. You know, last week, you know, we were roughly pricing a 30% chance of an ECB hike on Thursday. We're now up to a 75% chance if you listen to money markets. And even the rate probabilities are up sort of 65-69% chance now. So what it's done is it's shifted the balance of risks now for the meeting. The balance of risks, or the greater price risk now, is if they don't hike rates, because now there's more in the market expecting a hike than not. Doesn't mean the market won't pop on a hike, because there's still enough people in the market who don't expect them to hike, so there'll be a likely knee jerk if they do. The question will be from that point, if they do hike, is that their last one? And if they don't hike, will they be more closer to a hike in the further months? Because they're all about these inflation forecasts, and I keep saying it, and a lot of people focus on the growth outlook and what's happening in growth, but those forecasts are pretty much a decider for the ECB. It's why a lot of them say we won't make our decision until we see the forecasts. So if those forecasts are showing inflation becoming more stickier, that's going to feed into their thinking. Their mandate is price stability, not growth stability. So I think the market pricing now is probably about where I was. I was saying that I think the market is underpricing the risk of a hike in September. Doesn't mean I think they're 100% going to hike, but I think there's a greater chance than not that they do hike, or greater risk than the market was pricing anyway. But as I say, we know where we're at going into it. Okay, last week 30% chance, now a 75% chance. So the risk going into this meeting. It's all about where the market is leaning going in, because that tells you where your price risk is. So what do you think, Kay? Do you think this is going to push them close to a hike in September, or will they hold off but be more hawkish about October?
Until now, I was and we were like, really, this is really a coin on its side, right? And it can drop either side. Everything was really in the middle, and everything was possible. Of course, now it's leaning more towards a hike now, or at least a hawkish hold, and indicating a hike at the meeting afterwards. We have to lean more towards a hike, even though the hold is still possible. So I am sort of where the market is on those rate expectations. But then again, what kind of, if they hike, what kind of hike are we going to get? That's always the big question, right? Because okay, if you make comparisons, Powell has been very hawkish for a long while, and now he's walking the fine line. Okay, he's been doing it relatively well, walking this fine line, whether to know whether they need to hike or more. Lagarde, I thought that she was, due to growth really slowing, I thought she was going to start to lean back even more dovish, but she hasn't. So she, in that respect, has surprised me a little bit. And she is now probably, if that sources piece is right, she's probably will have to lean towards the hawkish side. But is it going to be reflected in a rate hike or in the statement? That's now going to be the question. Because if they don't hike, even with a hawkish statement, I think the euro gets hit. Because the market is leaning towards the hike, and they will have to at least temporarily price it out again. Even if the next one can still be priced, it's going to, and you compare it with the Bank of Japan, right? What they do and what they don't do. And that's going to be a bit determining tomorrow, I reckon, for euro crosses. So it's going to, I don't think that pricing in the hike is making things more simple. Let's put it that way.
Yeah, I agree with that. I mean, I've been thinking about this. I think the trade for me right now is if they don't hike, because we don't get those forecast numbers until the press conference. So if they don't hike and the market's leaning more towards a hike, I think you see downside in the euro dollar. I'll be very tempted to buy that. Just on the basis that if they do hike those forecasts, then the ECB is going to be saying, okay, we have a hike this month, but a hike's on the table October or November. And that will probably undo any downside in the euro dollar. And like you say, if Lagarde then comes out hawkish, any dip in the euro is gonna reverse.
Yeah, I think we can have 3 waves also tomorrow. If they don't hike, that is, okay? You're gonna have like euros getting hit probably back to, what was it, 106.90, although there's a couple of really decent levels just below there as well, around the 106.35, obviously. Could get really hit hard, and then if the forecasts come out, do the bounce. But then I think that bounce, if they don't hike now, that bounce should again be sold into, or will probably again be sold into by the players. That's about how I see it. And if they hike, it could be the other way around. If you see levels of 108
it might be a bit
above, if you see levels of 108 or above, we may find sellers again, because what the report or the piece also said is that they probably will revise the GDP outlook over again, and that's ultimately growth is what's going to hold up a currency or not, in my opinion. And I haven't changed my mind on that one, and we can hardly say that growth in the Eurozone is now doing really well.
Yeah, I mean, context is needed. Even if they do hike now, it's likely to be the last. We know they're coming to an end. So, if they hike, I'm not expecting 200-300 pips out of this. It'll be one and done, and the market will trade that accordingly afterwards. All we're going to be looking for here is just the short-term price moves, the knee jerks, the algos, just getting on that hike or no hike headline. But the longer term picture is it'll probably be one and done, unless they're really worried about inflation. But it might be folly, a bit folly, trying to put price levels on it now, since we've got CPI coming up. It could be at 106 going into the ECB. So we have to take that into account as well. We'll talk about the CPI in a moment. I'm just going to get the rest of the headlines out the way. Not too much. OPEC had some data out showing that there's a 3 billion barrel shortfall in oil markets with all these cuts. So that's added some pressure to oil prices as well, to the upside. Over in the US, House Speaker McCarthy has launched an impeachment probe into Joe Biden. This is on the back of alleging corruption and all to do with Hunter Biden and his business practices, and whether Joe Biden has profited from those. So you can tell we're in campaign mode at the moment, because all the guns are coming out. McCarthy also said he has a plan to avoid a shutdown, that he will unveil a stopgap funding plan today. So we'll see what that brings. Amazon is also apparently going to boost its pay for contracted delivery drivers, according to CNBC. So potentially some wage pressures going on in there. We all still know that there's a bum fight going on with automakers and the unions. That hasn't been resolved, and it looks like it's heading towards strikes. And for all you Apple followers, more news to do with those guys. French watchdog has halted iPhone 12 sales over too high radiation. That's not good, even though we're talking old hardware, seeing as they've just released the iPhone 15. But China's foreign ministry issued a statement saying that China has not issued a ban on the purchase and use of foreign brand of phones such as the iPhone, and that they noticed some security incidents involving the iPhone as the reason why they stopped using it in government offices and government people. So considering what happened with Apple stock when this news came out, let's just pop it up there. When we first got news of this iPhone ban, we can probably expect that China saying that they're not banning it outright. We're going to see an upside reaction perhaps in this one, and maybe a gap higher. I've been looking around to see if there's any CFD markets open, but apparently not. We can't trade any open cash CFDs ahead of the market close, so I'm not going to be able to front run that one. But if you're into your Apple, you might be thinking about this gap opening up on that news potentially. We'll have to see whether the Yanks note that news when they come in and when stocks open. because if it opens down around these current levels, might be a little opportunity if that news hasn't come across, but we'll wait and see. Kay, you got any thing you've spotted in the headlines you want to bring to our attention?
There's one little odd thing which has to do with geopolitics now, and so there's been again, I mean, in this China-Taiwan situation, right? And once more, it's probably nothing for today or tomorrow, but the tensions are always quite high, and there's been a bit of a build-up again of military presence in the province just in front of Taiwan. But now they came out somewhere overnight saying that the China touts economic gains for Taiwan in co-development plan with Fujian. Now they want to go the other way around and trying to attract or trap, should I say, Taiwanese companies in a joint market opening over in that area. And Beijing will encourage Taiwanese firms in Fujian to list on the Chinese stock exchanges. So if you can't force the issue with arms, you do it with money. So there's a bit of a, I don't know whether Taiwanese companies will take that bait, but yeah, there's something that just caught my eye. Yeah. Not sure if it will have any impact again, but a refusal from Taiwan in that respect may actually increase the tensions another little bit, and that meeting between Kim and Putin is probably just helping the tensions in the zone over there. Yeah. But for the rest, what is immediately market moving? Yeah, Kishida reshuffled his cabinet. What the most close to our markets is concerned, there has been no change. As well, Suzuki, Minister of Finance, and Matsuno, the Chief Cabinet Secretary, have both been kept in place. So that's the stalemate. There's one other one that is actually coming back. Is Kihara, who was the Suga advisor. He's back on the what is it again? Anyway, he's probably going to be a little more hawkish on the geopolitical front. So that is one thing that we should perhaps keep in mind where it comes to geopolitics again. So Japan probably going to keep its rather hawkish stance on geopolitics. Remember, Suga was Abe's right hand, right? And yeah. they always went every year to that famous war shrine and things. And Kihara, being one of his close allies to Suga, is probably the hint that Kishida wants to keep a bit of a grip there on geopolitical relations.
Yeah, very much so. Thanks, mate, for that. And yeah, I saw the videos of little fat boy walking around with Putin around some factory or other. He looked quite smart in his suit, actually. Usually looks like the man from Del Monte, but he was all suited and booted, tie and everything. And
wait for the haircut, sir. Have you seen his haircut? That's going to be that's great.
I mean, the funny thing I've noticed, there was one video, I don't know where they were, shipyard or something, but they were at the edge of something, and Kim was on the railing, leaning right over and looking, and Putin was a couple of steps behind him. He didn't want to get too close to the edge. I don't know if he's fearful of being shoved over, but yeah, that stood out for me. But yeah, they're having their chats, and there has been some talk that maybe there's going to be an arms deal going on between Russia and North Korea, which will be interesting to watch, because if something like that gets agreed, again, it will be something that China would have given their thumbs up to.
Absolutely.
So that in itself is going to be another little signal about all this geopolitical stuff ongoing. Even if they don't say anything, you'll know by their silence what their intentions are for that one. Anyway, Eric says that's the national haircut out there. Yeah, the old short back and sides. Oh, haircuts. I remember those. Right, let's get stuck into some prices. Now, euro dollar is on the retreat after its little popette last night. Got up back into the 107.60s. Been speaking about this all week. You know, we've got levels, support levels, we've got bounces. The bounces aren't going very far though, and they're running into trouble whenever they get to the next step. So we hit that prior highs in the 60s, and we've come off. That looks to be a little bit on the back of a bit of dollar strength, just generally, but nothing too great going on around here. Dollar yen. Again, just still grinding. Haven't quite got up to the highs we saw this morning. It came off a bit, but it's not dipping too far again. This is all a bit of treading water, I think, before the CPI. The market would rather be long it than short it at the moment. Obviously, as Kay often says, it costs you to be sitting in short waiting, doing nothing. So no point in bleeding money away. Cable, we had a little test of the old 124.50 and a little move under, maybe a few little stops sitting under there. I suspect the bulk of the stops are probably sitting through 40 if there are any in size there. So had a little mooch, then we had a really decent bounce, you know, all the way back up to near 85s. So quite a strong bounce of that. But again, you know, we're still talking small levels here in the grand scheme of things. So there's a lot in there with the data. We've had a bit of reversal. That saw euro sterling. So again, that move might have been on the back of the, you know, some stops getting hit through this 86.10 area on the back of that UK data, and obviously the sources piece from the ECB. But we're not looking like we're holding this break for now. We're moving back below. We're holding the 86 big figure, so you've probably got to look at a bit of a zone here, 86, 00, 10, 11, 12, whatever you want to call it. If we can hold this 86 though, it does potentially set us up for a move higher. But even then, you know, you can't take too much into it with the ECB tomorrow. You know, this could be at 87 or it could be back under and down near 85s again by tomorrow. So you've got to take all this with a pinch of salt. We are above this trend line. So that's a secondary area to look at for potential support. So if we can't hold 86, can't hold the trend line, we're likely back in the box. We have had prior moves above this trend line, little extensions that haven't held for any great length of time. So keep an eye on that. If we do maintain this hold, we got the zone up here to take care of next, 86, 45, 50 up to 70. So that's the traffic zone for that one there. This shouldn't be too impacted by the CPI report later, only via the volatility difference between whatever happens in euro, dollar and cable. So there might be a little bit of a move on that if, you know, cable goes more than what euro dollar does on the US news. But apart from that, it should sail pretty calmly through the CPI numbers if you're watching that one. Just looking around, dollar CAD, it's holding up. I had a level around 50s, one of these on-off levels, you know, old S&R levels. When you're below, you hold below. When you're above, you hold above, sort of thing. Give or take, it's holding. A bit like the 124.50 in cable. But bounce is not looking awfully strong at the moment. So we need to keep an eye on that as well. Again, CPI could be the decider. We could either be above 136 or we could be down testing or through 135. So when you get moments like this where you got a big bit of data, probably a bit of volatility coming in as well, it's all about it's not necessarily about what the initial move does, it's about what it does after. So an e-jerk might send it all the way through 135, 134, 70. But then 10 minutes later, if we're back above and holding it again, then, you know, maybe you've got a bit of just a data move, you know, everyone jumping on the bandwagon, the knee jerk, whatever you want to call it. But if you're back above and then holding again, then you can trust the level again. But I wouldn't trust these levels 5 minutes or 30 seconds or over the initial seconds of the data. I always look at what happens after. Where might the stretch points come in? You know, if we break there, then I'll be looking at 134s as a stretch point. Same above. If we get above 136s and 136.50 might be a bit of a stretch point for the data. If not there, then up at the highest 137. So lots of, you don't want to get caught in the middle here. That's all I'm trying to suggest. Yes, mate.
If you look at that 135 is really a bit of a magic level there. Yeah, you had the prior top 1, 2, 3 retests down there. No, just in the past since August, mate. Just you didn't have to widen it out. Just go back. Well, okay, we had already that level before as well. But if you go back to where you were, then perhaps widen it just that little bit, because I like it when you have that zone marked there, that box. It's really a good level, right? And I think for as long as that holds right now, it's going to be not in the short term, but in the, let's say, more medium term, more than just data, let's put it that way, or the immediate reaction after data. For as long as that little zone there holds, we cannot say that Canada is really on the oil wagon, right? Because we have seen the better jobs report. That is one thing. Then we have seen weakness in elsewhere. Like, for instance, Euro Canada has been coming off. Canada yen has seen a very strong rebound. In that respect, it traded with energy. But if you then look at its cousin, Norwegian krone, which trades on the back of Brent, and so Norwegian krone can't find the bid either. So I'd still argue, for as long as we hold above that 135, perhaps your 134.65 there as well, so that little zone, we still can't buy Canada based on oil, for instance. And there's still a fair percentage of chance that, and I'd love to see a test of the 135 really to confirm that. But if we retest and confirm, that thing could actually start to move up again. And likely then going for the real test of 137, the trend line up there. So it's just a thought when I look at that. And you take everything else away, this is not yet really looking like something that reverses. If we break below that box, yeah, then of course, I mean, then we're probably going to see lower. But that will probably mean that there's something wrong with the dollar as well, in my opinion.
Yeah. No, I mean, I think the top side is a bit tough at the moment with oil.
Yeah, exactly.
Probably just the last day or so, it's been a bit more tied to the oil moves, but then there's been several other factors. You know, we've had the BOC, we've had Macklin, we've had a bit of weakness in the dollar, we've had this oil break. So the influence is why CAD would gain has just stepped up a bit.
Report. We had the labor report as well in Canada, and that seemed to have been the kicker for some of the Canadian positions to have forced to unwind also.
Yeah.
But it's still only, if you look at the dollar Canada itself, it's still only, what should I say, I mean, 100 points lower, let's put it that way, from 136.5 and above to here. It's 100 points, which is not that much. It's less than 1%. It's 1% from the highs, really. It's not such a big move, huh? So that makes me think that 135 and just there, that box is going to be important, and I'd love to see a test to see what is doing around there.
Yeah, and it's funny that 38.2 comes in right around that bottom of that box as well. So it's a big level, but I think, you know, it's only, you know, 50, 60 pips away, which is not a lot for this big data. That's why you've got to be careful on a data move on the CPI. If it's a big you know, downside number, inflation doesn't rise as much, you know, it's very dollar bearish, then you've got to you're going to expect maybe this to break, or at least 135 to get a good test and a possible break just on a knee jerk. But that's why I say give it a few minutes, let the market sort itself out. If it doesn't hold the break, you know, and half an hour later after the CPI we're back above 135, that might be the time where you think, yeah, okay, the level's going to reassert itself, and that's when you maybe look at if you want fancy it taken along there. But just over that initial data number, just be very careful, you know, especially with dollar CAD. It has a habit of going a bit further than people expect and going through a level with great ease. But anyway, Kay, Gav says if 135 goes, could be moved down to 134. Yeah, I think on a proper break, you're probably likely.
And then you talk about the 50%, if you want to look at it in technical terms, around 133.90, and where we also roughly around there find that prior top from July. But yeah, I mean, it can, but I'd really, it's like the zone that we had up in the 136s when I said like, oh, this is it's a pretty decent zone, and I'll show it again. And then we went above once or twice, and then started to fail, and then we did the 100 points lower. And I've got the impression it could do the same thing around that 135, do the 30 points below, down to 134.65, 70, and make the market believe it's really a break of 135, and then all of a sudden turn around. I'm not saying it's going to happen. I mean, anything can happen right now, because this US CPI will probably be a big enough mover to take it one way or the other. But it's a real fair possibility to me that we are going to see that box and then all of a sudden hold there and fiercely turn around. It's just a possibility that I reckon.
Yeah, and I'm on the flip side, because obviously I'm still long. If we got to move up on CPI to 136.50, I think I would definitely bolt out my longs, maybe even try a short up there, just on the balance of what's affecting CAD right now. But we'll see what happens with the data. You know, there's always more than one trade you can have. Anyway, do you want to grab the screens, mate?
Yeah, sure. Right, so tradition, watch the spread, and from today it's going to be important. Yeah, the EU-US spreads. We had a bit of that little move up here late yesterday on that report. Okay, take it for what it's worth. The trend line, I may even like take it out. The right level is probably somewhere around 180 BP spread, or even 175 here. This is going to be moving on in the next 2 days, is my guess. If it doesn't, well, Merry Christmas. Then I don't think euro dollar is going to move before the end of the year. But over the next 2 days, or take the FOMC with it next week. We are in a zone where we may see decision time for the rest of this year, and I know especially because we don't know what kind of decision ECB is going to make, a dovish hike, hawkish hold, or all of a sudden, like, they're turning back to being a lawyer and confusing everybody like she pleases to do. But there should be some kind of decision made here in the EU versus US differentials today and tomorrow. So this one is going to be directing your euro dollar to a certain extent. This one, and perhaps because there's starting to be some chatter again about the BTP spreads versus the core European. And here I'm taking the German, the Bund yields, because that's the one that the market is most of the time looking at. Okay, but we have seen a little bit of, I wouldn't say big stress, because we are nowhere near those 2.5% differentials, but we're seeing a little bit with Italian budget and everything starting to this spread starting to creep up. And traditionally traditionally, this is not a great feature for the euro dollar. But we are not yet in panic land, okay? We've got this big traffic zone here, which reaches up to 205 BPs. So we're only trading at 100 and not even 180 BPs, but it may be on the move. You know, we keep an eye on that, especially if you get a combination of a not too hawkish ECB and this one pulling up. That could weigh a little bit on the euro as well. But this is just one to use as a kicker. You don't trade euro dollar, especially not right now on the back of this. Okay. Euro dollar, we're still in that wedge or channel or whatever you name it. This one is probably going in the bin right now. I think here, this is it. 108 is going to be the combination of US CPI and ECB. It's probably going to be 108. Confirmation through 108.30 probably will see the thing move higher again. If nothing helps the euro, if we can't get above 108, I reckon we see some exhaustion again, and we may start to move lower and have a look at this prior low around 106.30. And why not? You know, there's a lot in the market. A lot of people in the market are talking about the 105. This is it. Why not? It's possible on the combination of the ECB. For the time being, I don't really have too much in cash in this, but I did buy a bit of downside because I don't like what I see on the European growth front. But I'm not risking much on a cash position. I'd rather do it via options. I know what it's going to cost me if I'm wrong. Cable, yeah, I mean, Ryan already said it. This is basically it. The goalposts, prior lows, and the 125.5. You go into the US CPI on a slightly well weakish report out of the UK. If the CPI surprises a little bit to the top side, which is actually the expectation today, so the surprise trade might actually be the other side if it disappoints on the US CPI. But if US CPI confirms a bit of a higher reading, I reckon we can at least go and test 124, the figure here. If it goes through there, if it's really an overshoot and it's going to change Fed expectations, combined with what's happening on the data front in the UK, it's possible that we may go and have a retest of those low 123s. But for the time being, I've got just a little bit in it, but really nothing that's going to risk my book. The thing is, right now, as we have been saying, the situations could be a little bit complicated. So then you see those ranges develop, and it's really not worth, well, at least not for me, it's really not worth to go and try and risk your account on a flip the coin play, right? So I'd rather have now confirmations of things breaking or holding, topside or downside, because the next week or so it's probably going to move a lot, right? So keep it all sensible, please. Yeah, dollar yen, and I just want to go back to something that I noted when Wada made his comment over the weekend. We held on the 4-hour cloud, okay, and since then it's roughly been supporting what's happening in the dollar yen. So I usually don't go under the daily, but I think it's relatively interesting to see what's happening to the dollar yen, and just to keep a view on it when, well, first of all, on the US CPI today, and then secondly, perhaps already preparing to see what's going to happen on the Bank of Japan. And if you look at it, in theory, it's going to hold for quite a while on the base here. And this is also where the fib lies, and this is roughly, give and take, where the bottom was. So keep an eye on this 4-hour cloud in the dollar yen. I'd say for the support. This is going to be your first decent support around here, I would say. Okay, the top end is perhaps a little close on what's waiting, but you can use it for if you're, for instance, are I don't know, playing the long side or so. You can use it, because if we break sub 146.80, perhaps we are going to test this 146.15. It's just something that Ben and I have been looking at in the room a couple of times, and noted that it had played a role. And don't forget, the Japanese are looking at clouds. Okay, they are. Now that's about it. I think the CPI will decide on the top, and even though if the CPI overshoots, and I'm going to be very careful here, I'm not 100% sure that if we see a break here, that it's really going to hold and straight away go to 150. Although, again, the market seems to have understood that UEDA is still not going to go full speed normalizing. And again, the Japanese government is preparing more stimulus for October, so that should keep the yen on its toes. And again, I can't repeat it often enough. If you're short dollar, or if you're long yen versus something that is most of it, if it's not Swissy, also. It's very hard to defend your position for a long time, because funding is really biting rapidly. Let's keep an eye on the have a view on the rest of those dollar pairs. Aussie, we are hanging around this trend line, which is now watered down, of course, because but it held, bounced, and then came back under. I think it's roughly done its job. So the main level is going to be those lows here again, around 63.65. 1, 2, 3, 4, 5 tries, and it held. Okay, so this is a big level enough. If you see a bit of an overshoot of the US CPI, and the Aussie retest 63.65 and holds again, that means that there are a lot of bids down there. If we start to go below 63.30, 63.10, 05, then we're probably on our way back to those prior lows. But therefore, I think we should really see a big overshoot. I'm not sure if we can get or expect or hope for such a move on today's data. Top side, there's a bit around 64.60, then 64.90. And then the prior tops here around 65.20. Those are your levels on the top side, okay, to watch if we get a weaker CPI. And look a bit at the overall thing here. We're still very much in a downward channel, but we have to note those holds, okay? So if we get a weaker CPI, I'd say that perhaps there is a case for this to go back up to 65.90, 66 even, okay, if we get a weaker US CPI, because then all bets for rate hikes may actually be gone, possible rate hikes, and the market may start to look at 2024s again. So that's in case if we get a weak CPI this afternoon, okay? That for the Aussie. On the Kiwi, it's well, I mean, it's a similar situation. We had a look below the channel support, and we bounced. Okay, so here is the same thing: 58.60, 58.65. That's where you want to be paying attention to the Kiwi. If you want to have a level of comfort, if you want to trade against it, or if you want to see, oh, if that breaks, then it's really going to crap the bed, I'd say it's around 658, 40, 45. Okay. Dollar pairs. If you get a weak CPI out of the States, look, we're trading around the next support on the mix here, 1721. Get a weak one, I would say that we can have a test of the 61.8 around 1710 today. That's a possibility. If we get a really strong CPI, though, then this one is going to get complicated, because if you say strong CPI in the US, since the Mexican peso has become a big manufacturer of the US with all the geopolitical pressures, we may have an initial retest of 1740, but then you have to watch again what's happening there, because instead of ramping through on the dollar mix, it may be that the Mexican peso actually gains a bit of strength versus other stuff. And I always take the euro mix as an example, but we may as well take the mex yen too, which is on its way up. If we get an initial reaction on a strong CPI, and it's an emerging market, I think this one may really. Yesterday we had a bit of a rebound, but keep an eye on 1862, 64, 68. If you get a rebound in this, and even for tomorrow, the ECB, and we can't get above this level, this I think is going to crap the bed again. If you go through 1868, then we probably are in for retests of those higher levels. I am done with all of this. I just want to show this one thing that I was mentioning. Despite higher Brent prices, Norwegian kroner can't really find a bid for longer than a few days, and we're back testing, trying above this trend line in the euro NOK, and the dollar Norway is just creeping back up to slowly creeping back up to the resistance zone. So this is another one to watch over the US CPIs. If we start to break above 1074, 78, this one could spike higher, just because of the fact that Norwegian kroner is not able to find a bid for longer than a couple of sessions, and with Brent moving higher, it really should be stronger, this Norwegian kroner, and it isn't. Back over to you, Mr. Ryan.
Thank you very much, mate. Well, I hope that's got you guys and girls nice and covered ahead of the CPI data. Trade it well, be safe. Remember, if you've got big levels that are close to the price going into CPI, don't rely on them too much. See what they do afterwards. A big level over data might blow, but it might then show up again afterwards. Anyway, we shall know what happens on tomorrow's show. We'll go over it. Have a great day, everybody. Trade well. Thank you very much, K-Man. We'll see you all tomorrow.